Crypto markets continue to decouple from stocks and precious metals as geopolitical risks ease, but another US government shutdown could be happening this weekend. And that would delay further key crypto legislation. Key supports are being tested on both Bitcoin and Ethereum, and put protection remains in high demand, suggesting that the lows may not be in just yet. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT. Today's special guest is Adam Brice, trader at Hivemind Capital. Welcome.
Pleasure. Thanks for having me.
Yeah, good to have you on.
Good to have you on the show. So, still feeling pretty heavy, this crypto market, Dave?
Yeah.
When are we going to get this rally?
Yeah, I know. It's
Starting to lose my patience.
it's frustrating. We're in consolidation mode. We're in a range. Like you say, there's lots of fear on the downside, but and there still feels like there's a wall of resistance towards the upside as you get towards that 98k. I think it feels especially frustrating given the moves we're seeing in gold and silver, where all the fun is right now.
Historic moves, right?
Yeah.
Yeah. Well, we'll get into that with Adam because he used to be a precious metals broker.
I know.
Found out.
Yeah.
Another lifetime ago, but yes, I did indeed.
Well, actually, why don't we kick off there, right? So, yeah, tell us a little bit about your history, your career history.
Yeah, okay. So I'll probably go a little bit further back than that, actually. So way back, I was actually an apprentice professional footballer.
Nice.
Well, yeah, it was just tough graft, but yeah, it was good.
Whereabouts? Who for?
It was all the Shutdown when they were in the Football League. I may add, not
Yeah.
now they're struggling around the bottom of the conference. But it's so I did that. Sort of knocked about, that was maybe 2011. So after that, sort of knocked around higher levels of non-league football, sort of just trying to scrape by. You know how it is. It's down the bottom. It's always a bit of a tough gig. Sort of, long story short, sort of fell out of love with it. I don't unfortunately have a sob story about I done my knee or whatever. I just stopped liking playing football basically. So yeah. I then was just searching around what to do next. What because that was all I knew. Stumbled across markets. Always had a little bit of an interest in them generally because with my upbringing, again, my father was a firefighter, my mother's a dental nurse. I watched them work 2 or 3 jobs each growing up just through 2007, 8, 9. So again, it was just really about, okay, so if you get money, how do you keep it? So I looked into investing, did the whole traditional trading 212 apps, CMC markets, those sorts of things, just as like almost a gateway in. And yeah, basically I started applying for bottom of the ladder jobs basically, and literally just an independent sort of brokerage came across on just a jobs website and got an interview, had a couple of rounds of interviews and landed a very, very junior position on a desk. So yeah, it was that was my gateway into what was finance and precious metals, and
they weren't as exciting.
They weren't. No, they weren't. They had a little bit of excitement during the sort of Trump election, and further back than when I started. But obviously, Russia's first sort of play in Crimea and things like that in 2014. But for me, it was again feeding back into that. If you get money, how do you keep it? Gold and silver. Well, that's been around for millennia. That sounds like a good way in. So yeah, that was how I started. As you say, definitely not as exciting as they are now. Pretty insane moves pretty much since COVID. It's been creeping and then it's just exploded. Yeah. Can't say it's particularly surprising given everything that's going on.
I definitely had conversations in 2020, 2021 with a friend saying, yeah, gold's going to 5,000, right? It's just a matter of when, not if, right? But I have to say, the speed at which it was gone from 3,000 to 5,000 has surprised me, right?
Yeah, you're never short of a narrative in gold and silver. I think, again, you've got huge gold bugs online, right, with whoever they may be, naming no names, they hate Bitcoin.
we all know one of those, big one of those.
Sure, but again, arguably, it took a long time, but it was probably the safest bet out there. If you can keep printing money in thin air, and it's going to end up somewhere, and why not gold?
So what triggered your move into crypto then back then? When was it exactly?
Yeah, so before I actually started working in finance, again, this is when I was sort of towards the end of my, I wouldn't call it a career, but towards my sort of stint attempting a career in football. Again, as I stumbled into these apps and whatnot, this is end of 2015, 2016. So you scroll through the asset classes, you see commodities, equities, FX. And underneath FX, way back in the day, from my memory, I actually got a screenshot on my iPad somewhere just as a bit of a memory, but you had virtual currencies. Obviously now we know them as digital assets, but this is like early-ish days of them being sort of more mainstream for traders, essentially. And I started looking into it and going, okay, Bitcoin, like Bitcoin Cash, like Litecoin, like all the like OG ones, right? And you look into them and you go, okay, that, you look into Bitcoin for the first time, and I think everybody goes through that sort of penny drop moment, right? Where, again, linking back to my own experience and why it was so important for me was, again, linking to that. How do I get money? How do I keep it? And how do I build wealth? And then it was like, well, actually, instead of using banks, you can go peer to peer. Well, that makes sense to me. I was born in 1994, so like everything has pretty much for my adult life been digital anyway. So a segue into a more digital world made total sense to me. So my interest perked up then. As the desk I was working on sort of branched out into different realms. Obviously, the hot topic at the end of 2017 was Bitcoin, and obviously there was only 2 or 3 of us, again, all the sort of similar age, that had an interest. Again, older chaps were very much gold.
They don't like change. They fear change.
Absolutely not. So as they started to sort of understand the mechanics and essentially how much they could make off this, because again, it was a completely different world to what it is now. They spun up essentially a crypto desk.
At the broker.
Yeah, pretty small. Like the whole target was to like even be like 10% of like the PM volume or whatever, or like the net of fees, whatever they were making at the time. And obviously by 2021, peak 2021, or coming into that, I just left towards the back end of 2020. But I had friends that still worked there, and the digital asset desk had taken over essentially.
Wow.
And rightly so, because again,
that's so
probably
funny.
not, we probably wouldn't now, but again, at the time it was,
that's where the action was. Right?
It was. And to be honest, I think a lot of gold investors specifically resonated with Bitcoin.
Yeah.
I think a lot of
so you could talk to the same clients, but just offer them a different product.
Yeah. And you could, it was super basic. It was, this is all spot. There's no margin. There's no risk, but again, it was, this is not going to be sort of traded in and out quickly. This is going to be as you look at your gold positions, and it can be 5-10% of your gold positions.
Yeah.
And then it could produce potentially X amount on top of that. And then people
because
looked
it's
at the
got
risk.
5 times the vol.
Yeah. And people looked at the risk to reward and went, makes sense.
Yeah.
And then that was the sort of way I went in.
It was really funny actually. That reminds me. I pitched a hedge fund back in. I think it was 2020 or 2021, right? And I pitched them a strategy called the monetary debasement strategy. And I said to them they should do whatever capital they get into that fund, they should put 70% in gold, 60% in gold, 30% in silver, 10% in Bitcoin. And with the gold section, they should hedge it with options, right? But with the silver and the Bitcoin, they should just let it run because that's your call option basically, right?
Sure.
And I didn't get... They didn't care, right? So nothing happened. But oh my God, I think that would have been the greatest fund ever.
I think you've got to go back and work out what the P&L is on $1 billion and say, well, I've got a great business idea.
But it was so obvious that was a natural shift for people who were already in that trade and in that investor mindset of trying to store value against a world that was debasing currency. Like that was an obvious fit.
Yeah, and I think it just goes to show that times change, right? And we could not be seeing more of a disconnect as we probably are right now.
Yeah.
I think, and don't get me wrong, I think a lot of people are willing a gold rotation trade into BTC. But again, I think just from my experiences, if I think about, I don't know, what the average gold investor looks like, physical gold investor, not necessarily paper, they're just not interested in BTC. So I think that in my view anyway, I think that the rotation trade, it will, if it does happen in some capacity, won't be anywhere near what people are expecting. And I think it will be, the biggest disappointment.
I agree. Like, I've been chatting to people about this week. Like, there's a real structural flow into gold. And I do think it's a de-dollarization move away from sort of US as a reserve asset.
Because the dollar's coming off against all the other currencies like euro, sterling, yen. We'll talk about yen.
But like, so I do think there's a kind of, and I don't even just think it's the dollar. I just think generally, I actually, and I think we've spoken about this. I think with the whole Russia-Ukraine thing, when they started to essentially freeze and then take Russia's dollar assets, and Europe did the same. I think it's become holding foreign currency assets.
There's another risk.
There's another layer of risk, and actually, so you want non-sovereign assets to hold, and obviously gold for that cohort is like, and for central banks is what they're going to hold.
Isn't the whole point of a reserve to be the sort of least risky part of your asset base? Now, that's why it's a reserve, right?
In a world of cooperation and everything, you felt comfortable holding dollars. Now Trump's particularly, calling that into question. So now it's okay. Well, maybe we don't want them or another country weaponizing the currency and the assets which we hold. So then, well, what else do we hold? And right now, for certainly for central banks, governments, it's gold.
But the marginal
that will change over time. But
the marginal buyer is clearly coming out of Asia, right? Because you can see that in the spread between Asian prices and normal US prices, right?
And I think
are going crazy.
And I think obviously there's a valuation effect, but gold is now a bigger proportion of global reserve assets than treasuries.
Yeah, I think Luke Groman put a piece out saying if you look at like foreign holders of treasuries, the market cap of gold and silver as a percentage of that, I don't know if it was gold and silver, but basically it was like it's hit 15% as a percentage of the outstanding foreign AUM of treasuries. But if you go back to previous periods in time, there's still a long way that could rise.
Now, obviously, then you do get the momentum traders, you get retail degens kind of piling in because they just see the move and then they jump on it. And so there's maybe scope for a little bit of that reversal trade and like a pairs trade, short gold, long Bitcoin, and things like that. But like quite short term. But right now, the big structural flows are obviously into gold, and I'm not sure when or how that stops, if it stops. And then Bitcoin's got the reverse, right? We've got big structural selling, or we have had. It has slowed down, but from whales, long-term holders, and now you've got like even the short-term holder cost base, like selling into it. People bought the top, and I think there's again, like we've spoken about the distribution between 92k up to like 107k. There's a lot of supply that until Bitcoin and crypto, I guess, get some sort of narrative and more convicted demand, we're probably going to chop around. Couple of things I will mention though, which is just interesting talking about gold. It's pointed out to me yesterday, and again, I hadn't really just looked at the charts for a bit, but we've kind of back to, in terms of Bitcoin gold ratio, we're kind of back to where we were in like September 2023. So Bitcoin massively outperformed. So then essentially we've kind of given back all that outperformance back to 2023 levels. So I mean, to your point, if in late 2020 you were buying Bitcoin over gold, you've still done better. And then the other thing, Zero Hedge pointed out an article in the Wall Street Journal from September 2022 saying that gold has failed as a safe haven hedge. So it was just a reminder to me how quickly narratives change.
Yeah, and how when sentiment tops, you generally tend to see something in the press about it.
And right now, Bitcoin's like pure despondency.
And
there.
then precious metals are everyone's talking about. So it does feel like we are reaching a bit of a narrative top, right?
Yeah.
But these are very hard things to time.
Yes.
But when we look forward in 2 years, chances are we were not that far from a narrative top, I would guess. Right?
Yeah. And the fear is now, and we were discussing, and actually, let's get your views on this. It feels like we could break one way or the other. We could have a big washout down to, I don't know, 70k or something. Or maybe we do test back to 100k and test those. What are your views there, Adam?
Yeah, look, structurally, you're spot on. It's kind of on a knife edge. For me, again, my role at the moment is very much long short. So, from my perspective, it's the chop is good, right? Because it gives opportunity one way or the other. Again, just using BTC, we have found some form of pretty solid support off the low 80s. It does feel like the longer this narrative goes on, the more risk it then puts on people sort of not waking up to it, but people almost coming to their, like I said, spinning their view and going, well, actually, like if gold does keep going higher for whatever reason, maybe not like a Greenland situation, but again, maybe something more based out of Japan and government bond yields and things like that. You could quite comfortably for the next 4 to 8 weeks, you could comfortably still chop here between 84 and 94. And that's probably for the wider crypto market, the max pain trade, because since 1010, it's pretty much over 2025, but specifically 1010 after that, 95+% of altcoins are just insanely depressed, like on their price action. There's no bid, there's nothing. So narrative wise, it would make sense to have some form of at least attempt towards 98, 100, 101. But again, when you get to 100, you are at the inflection point. Like here, you could argue you're bottom of the bound, bottom of the range. So if nothing changes, arguably we're just going to chop and change, and we might scare a bit lower, but then the rebound will get everyone back bullish, and everyone will then be on the wrong side at the upper bound. But yeah, it's a tough market at the moment to have conviction one way or the other. So although that's quite a boring answer to say,
so for what I'm hearing,
could go up, could go down, basically.
No, but what I'm hearing is at this level, there's quite a lot of uncertainty of direction. But it's like if we get anywhere near 100k, you'd probably be quite a high conviction seller up there. Yeah. And if we get anywhere near 80k, you're probably quite a high conviction buyer. Right? Is that fair to say?
I think if you're going to range 100%, yeah. If
but at what level on the downside do you just bail? Because 74k is meant to be quite a big level on BTC spot. So I feel like if we break that and we see 70, then that calls in question the whole bull story, right?
I've seen again, information's rife in this space through whatever channel you want it, whether it's Prime Desk's color for the day, or whether it be just like speaking to people in the market, or whether it just be Twitter, for example. Like you can get an opinion bullish and bearish here. From the downside, I think if you take out local lows or those low 80s, I think looking at it and looking at how the market's traded, and then looking at the bigger macro picture, everything going on, Bitcoin is the leading risk asset in the world, and highly liquid at the moment on that side of things. So a move down to 74 was nowhere near off the cards. And to be honest, I was out of obviously a fund in 2021, and I don't know if you guys remember May 2021 for BTC, maybe mid-May.
Yeah,
rings a bell.
Big headline: China bans crypto, whatever, hash rate 0, basically just nilled, and the price went down 40-50% in one day. Yeah. I'm not saying that will happen, because the market is in a completely different space now, like spot ETFs.
But that's what happens to alts now, but that doesn't so much happen to Bitcoin because it's got different holder base, right?
Exactly that. Yeah. And I think, to be honest, because I've been in crypto for a number of years, I'm a big believer in BTC's still, from the global macro picture, is insanely undervalued, even at 80, 90, 100, 110, whatever, anything.
Okay, because let's rationalize that then. So what is that argument based on? Like that it's undervalued. Like how do you think about valuing it, basically?
Very much millennial way of thinking for this one.
Right.
So again, I think I said to you before, although on the trading side, I take the medium directional view. And then again, I found that to be on the more liquid side, the most effective for being profitable in crypto. On the longer term view, again, whether it be rotational basis out of whatever currency or whatever debasement or whatever trade, I just think fundamentally that if you look at the value or the wealth held by older generations, so boomers or my parents' generation, the one under that, not quite boomers yet, if you look at the transfer of wealth of what will be landing in the laps of millennials and Gen Z, I think you need to look at it more from a sociological perspective and say, how do millennials value things? And it's a very, the data is quite, it's quite clear that, again, they find value in things they use. They find value in things that are easy and things that are digital at their fingertips. And I think that, although I do always believe gold and silver will always have a place in a portfolio, and to be diversified is very, very key. I think that people, or younger people, I should say, maybe anyone under 35, maybe under 40, will look more towards, not necessarily going to say digital gold, but again, more towards that diversification play. And, we're talking in the trillions upon trillions of dollars at this point. So, I've written a few pieces actually about that. And, I think that younger generations just value things differently, whether it be just like network effect, or like it just be like Metcalfe's law. Like it could be anything, like more users or equals price. As obviously there's a few nuances there naturally, but that's my base case for it. It's more of a sociological pivot. Oh, and I think if you look at what's going on in the world with Ukraine or anywhere else in the world where there's a conflict kicking off or anything like that, it's not necessarily as easy as this, but if you want to carry X amount of, I don't know what the exact limit is, but if you want to carry cash through an airport, how much can you take through? Imagine trying to take an X amount of gold through an airport. Yeah. BTC solves that issue. And I think that, I'm not saying it will take over as the thing and it will be like the only way we transact value, but it's definitely gonna continue on its current trajectory, although again, diminishing from the good old days, I should say, but diminishing somewhat. That's my base case of saying this is not just necessarily a mathematical or quantitative view on it. This is like a more top level macro view. Yeah,
so it's kind of the general direction of the trend continues, whether it's from a fiat debasement angle, whether it's from a worldwide adoption angle. And a generational shift, all those things are pointing, are kind of tailwinds to it, essentially.
Something I'd add to that. So I talk about Bitcoin covers like the far left and far right of the risk distribution, right? Obviously, it's the ultimate risk on, money's being printed, everything's pumping, Bitcoin's got the higher beta. Then on the far left, when we're talking about like breakdown in, economic and political structures, then for me it becomes like the ultimate hedge. Now we're kind of drifting towards that with stuff that's going on with this administration and but I don't think we're there, like, because actually market and risk is all pretty relatively pretty stable, right? Look at like VIX and even bond vol and stuff, with stuff that's going on in Japan's still very muted. We're not kind of there, and therefore that there's a kind of a really almost sensible rotation out of some US reserve assets into gold from the central banks and what have you, that are probably going, all right, maybe we don't want that. In a more extreme scenario, and throughout history we've seen when gold gets confiscated and things like that, like then you start to go, oh, actually maybe Bitcoin's better. We're not in an extreme scenario by any stretch, so we kind of chop in between those sort of those kind of extremes.
You reminded me,
therefore we're not doing a lot.
We need to talk about Japan.
Yeah.
Because it just dropped 6 big figures on dollar.
Yeah.
So you want to tell us a little bit about that?
Yeah, well, look I think one of the things we've been talking about that and the risks. Japan is in an impossible position.
Yeah, we talked about. I think we talked about it last week on the show, right? And we were talking about long dated upside on dollar yen, which, by the way, I didn't buy yet. Yeah, right. Thank God.
and I've had a view that, like, I mean, the irony is when everyone's talking about the carry unwind, which should actually feed yen strength. I'm like, no, because they're hiking rates kind of for the wrong reasons. They're in this stagflationary world. They've got a debt problem, and actually, what you're seeing is the market is saying we're concerned about the Japanese debt dynamics.
But we were saying Japan is stuck between a rock and a hard place.
Yeah.
And we think the release valve is weaker currency because they're not going to let their bond market go.
Yeah.
But we did not factor in the Fed to the rescue and calling up all the banks and going, what's the rate in dollar yen in size? Right? So why are the US stepping in and being the savior to weakness in the Japan currency?
Yeah, well, like there's a couple of things on that. And I think I've said, like, all of this leads to more liquidity, right? It leads to Japan, like, basically buying up their own bond market or more of it. If they don't own enough already. And then it ultimately leads to dollar liquidity being supplied into the market to keep a lid on it. So Japan, firstly, so that's been playing out, right? They're still buying their own bonds to try and control yields. Even if it's not of a yield curve control, they're still in the market making purchases. That kind of obviously contradicts their policy of trying to hike rates, so therefore the currency's getting hit, and the currency's getting hit. I guess there's a couple of things. Number one, it's hard for Japan on their own to kind of keep a lid on their own currency, so they do need the US help. Number two,
but what's the incentives for the US to come in and do that?
There's a big incentive in terms of if Japan start having to sell treasuries to essentially raise the dollars to then keep a lid on their own currency. So, well, do you know what? Why don't you help us out and supply some dollar liquidity? And we can do it that way.
So the fact that Japan holds so many treasuries is one incentive for the US to step in.
I think as well, Trump's, he's trying to make all these deals and tariffs and everything. So that US exports are more attractive. Well, all of a sudden that gets unwound if the yen's just collapsed, and all of a sudden Japan looks far more attractive.
Okay.
So
a weaker dollar is somewhat good for the US.
Yeah. So they want a weaker dollar, so it helps that. And again, just from a pure like global stability, I think we all know if the Japanese bond market completely blows up, then all bond markets get caught by that. Besant is very acute and aware of that. So of course they've come in. So then, I mean, but right now it's kind of a very verbal price check-in. Like, where would you bid in dollar yen be? Let everyone know that I've asked you. I've covered like the PBOC when China want to intervene, and like they kind of will do it very loudly and messily, and just so then it becomes self-fulfilling. Yeah, the thing is now,
so they don't even have to use as many bullets because the chatter reinforces it, right? It amplifies.
Yeah. So again, but what I guess the key takeaway is we've reached a point of pain. Where both Japan and the US have gone.
Yes, it's almost like a line in the sand at 160 they've drawn, right?
Yeah. So like frustrating. Like we've had the Greenland thing, which uncertainty, Bitcoin kind of, and then obviously that taco trade, that's all kind of gone now essentially. And then it was like, right, now Japan was causing problems into Friday, and now we've seen that reversal. Yields have calmed down as a result of that. And obviously dollar yen's come down, which is then feeding broader weaker dollar, which is good for risk in a way. Tends to act with like a 3-month lag, but again that's feeding my bullishness longer term.
Then the government shutdown risk.
But then the government shutdown is the latest risk we have to deal with.
But equities don't care about that risk.
Yeah, but I think it's again, Bitcoin's and crypto's hyper liquidity sensitive, and then we kind of know that a shutdown means it kind of drains liquidity. Obviously, nightmares back to when we shut down in October, and that marked the top of everything in crypto. So it's just uncertainty. I do think this time is different in terms of the size of the impact relative to October. I think it's negative for Bitcoin, like at the margins. But
like Polymarket had 75% chance we get shut down by the weekend, right?
Yeah. So and obviously it is it's end of.
So don't plan any flights to the US.
But I think the difference, if we go back to October when we had, I mean, again, by the way, it's easy to forget we were at record highs in Bitcoin in early 4th of October, I think, and then everything tanked. But the difference is then you had the Fed doing quantitative tightening. and you started to have all the funding issues and liquidity tightening in the US funding markets. And then you had the lockdown, which was then like draining more liquidity out as the TGA, the Treasury General Account, builds up, because they still got to go and issue debt, but they can't spend that and put it back into the market. So that was draining bank reserves, right? And then that caused all the funding tightness, which I think ultimately hit crypto. Now you've got the Fed doing not QE, they're actually buying 40 billion a month in treasury bills, essentially to keep excess reserves ample or abundant. And in fact, it's kind of open-ended as well, so that could increase. So if we saw a shutdown that started to put pressure again on funding markets, you'd probably see the Fed up the pace of purchases. So I don't think we've got the same liquidity stress and worries that we had back in October, even if at the margin it's going to sort of take liquidity out of the market. So there are offsets, and it might be that we've kind of knee-jerk sold off in anticipation of that, and you might actually see a counterbalance. But again, like to your point, it just feeds this sense of uncertainty that in a world where we're kind of battling this structural supply, you know, what's going to really trigger like conviction in demand, and this takes away from anyone going, right now I'm going to strap it on.
Yeah, agreed. And I think I was reading this morning, again, it's slightly different in its mechanics, but the last yen intervention was June 24, I think, off the top of my head.
Right.
And again, look where we were in June 24, look where we went.
Yeah.
The lagging period you mentioned after.
Yeah.
It's
You mean they don't tend to work for long? Is that what you mean?
as in
the dollar impacts of the dollar feeding through like positively for
BTC and crypto and risk in general.
Yeah.
But yeah, it and again, when I talk about the inflection point, again, I think if we were where we are today, circa 88, if we traded very, very quickly to 9600, that's like that's a serious pain trade, because we've been capped at 92, 94 and ranging. The minute we break out of that range, you hit that sell wall or that, whatever, and you are battling that supply, as you said, and you don't really have a max catalyst or like an overwhelming change of sentiment. It's a pretty easy bet, I feel, from like a fund's perspective to make a risk decision there and to say, weighing up all the options, this is where we are, makes complete sense, right? But yeah, I agree with you. I think Japan's just one of many. It's like a revolving door of negative catalysts right now, right? and arguably you could also spin that and say, if this was 2021, the price would have been down 50%, 60%. So, and if you look at ETF inflows in the last 2 weeks, for example, we're still net 600 million in. So even though we had 1.1, 1.2 billion taken off last week, so you go, okay, well the demand is there from an appetite perspective long term. So what is the new floor? If we do what you said, and pretend not what you said, but what you put out there, if we do wick down 74, for example, and all these catalysts clear up, are we in a new? I know we're not going to get onto like that 4-year cycle vibe, right? But at the same time, like if that's the new floor, medium to long term, like, and we're trading then between 74 and the current all-time high, like, and we break back above 100, and suddenly we just break through these levels, and like sentiment spins, like it's kind of all bets are off the table at that point. Yeah. And it's like, but again, like don't get me wrong, I try not to. Well, again, I think when you've been in crypto long enough, you kind of lose that feeling, right? You kind of lose you don't get too carried away with anything.
No,
because you can't.
Yeah.
But at the same time, it's, like I said, the global macro picture needs to clear up. And I think the first, obviously, like you said, the Venezuelan situation has cleared up somewhat. But again, like the next big one is the Japanese bond market clearing up. I
have to say though, in this geopolitical landscape that we find ourselves in, it does feel like every month you're going to get a new thing that comes, right? It's not, you're not going to get it like plain sailing for 6 months and we're nothing to negotiate on the risk side,
What I will say though, and this is, I still like, because I still have to look at this within a macro framework, and that's how I look at the world. And again, I'm like, we came into October last year. the RRP, which was drawing down, and that was like 2 trillion plus of cash that came into the market over the course of a year or so. So of course everything was going up. Then it kind of essentially got to zero, tapped out. At the same time, we had Shutdown alongside like quantitative tightening. So of course you started to see tightening in US funding markets. That got addressed in December, right? And then you kind of go, all right, well, now we're in December, year end, and all that, again, generally drains liquidity, banks window dressing, all that sort of stuff. So you come into January, right? So now for me, in my mind, I'm like, right, this is now the Fed are doing 40 billion a month printing, right? Whatever we want to call it, not QE, whatever. You're printing money to essentially buy treasuries in the front end. We start to see it, and actually we had a very decent move, and then also you've got a lot of that window dressed cash coming back into the market. We had a decent move higher in Bitcoin for the first sort of week or so.
98,
touched 98, and we started to go, oh, here we go. And then it's been knocked down by some of this geopolitics and the noise around that. Risk asset, bang, everything gets knocked. And now we've got the government shutdown to contend with. So like it kind of, at least in my mind, everything kind of makes sense. And even if I didn't necessarily anticipate all of these things, kind of makes sense. So I still think like the liquidity side will win out.
I'm hearing
that's why I'm kind of more concerned about the shutdown and how
I'm hearing
much
the
it
next
impacts.
sort of impulse in terms of global liquidity might be coming from China. Have you got a view on that?
Yeah, I mean, again, they're going to have to,
Because
right?
they're in a bit of trouble in their economy, right?
Yeah, and they've still got all the same issues, haven't gone away, and they've got no answer to it other than they're going to have to keep flooding it with sort of liquidity, right? And
Yep. So like, is that the I guess rather than looking at US liquidity, is that the catalyst at the margin? Is it like some big liquidity impulse out of China that's actually going to create?
I think it's all building. I think it's building in Japan. I think it's building in the US. Like the US are printing money again. The balance sheet is in expansion mode again. So I do think at some point it all just kind of flows. Timing that's sort of difficult. So I kind of feel like it's all there. The other thing as well, and it's always been in my head. We had I think it was last year, some point early last year. Wendy O. Remember Wendy O came on, and she spoke about being in the US. Like, we're officially not in recession, but it's really, really tough for a lot of people in the US right now. Which is probably why sort of Trump came to power, right? No one votes for change if everything's going great, right? Yeah. And it's the economy's stupid, right? And we're in this K-shaped economy where essentially, obviously, AI capex and stuff's probably powering growth, and which is why we're seeing still an underlying softness in the labour market. So I do think that's had an impact, and rate cuts should start to maybe feed through and help that a bit if we get the stimmy checks as well. So that K-shape, the lower part closes up, then that's when you might see the alts start to actually perform again. But another interesting thing, which I don't think markets have priced at all in terms of within assets, is Rick Reader now is favourite, right, for the Fed chair. And I know it's quite volatile. We seem to but he's talking about. I mean, he's been quite open, saying rates should be 100 bips lower.
When are we going to get an announcement on the Fed chair? I thought it was going to happen by end of Jan.
So someone reckons it could happen tomorrow at the Fed meeting. Yeah.
Okay, so it could be imminent. Yeah.
But he's kind of got a very kind of almost like pragmatic view on rates, in terms of he kind of downplays the impact or the transmission into the real economy and inflation and the importance of, and he's like, and when you see him speak, he talks about, look, like the economy on the face of it's doing well, but you've got a housing market that's completely frozen, right? Because mortgage rates are still far too high. So he's looking at
but is lowering front end rates going to change that?
Yeah, but he's like, you might get steepness, but overall it should come lower, and you need to ease some of the things around that. He's even talking about the importance of rates in terms of US debt and the debt dynamics. and we need to bring rates down. So like he sounds like he would be quite an aggressive. If he comes in, he's going to quite aggressively want to get rates lower. And again, we need to price that.
Well, as well, if you were watching Davos last week, Jamie Dimon said he's open to the Treasury Secretary position as well. So it's like, you know,
jobs for the boys.
Jobs for the boys. 100%. I think as well, just touching upon that sort of maybe close this part of the chapter about Japan. It's again, if you're talking about intervention from wherever, and you know, say again, US assists in whatever way to whatever tune they find. If there's an intervention or like you said, there's sort of nudges on the shoulder, I've called, yada, 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 market stabilize, whatever. If there is an intervention and it doesn't stabilize, what's the contagion effect for that? And as you said, like it starts in Japan, it moves back towards Europe, it moves back towards the US or obviously emerging markets prior to that. And then where does that leave us from a monetary policy perspective? If the bond markets are running away beyond belief, what happens then, and how does that react to risk assets? That's probably one thing I think is probably on the back burner in my mind. Is like intervene all you want, but like say Japan's got a bit serious like concrete issues with how it's basically based its monetary policy for the last 25, 30 years. So I don't know if you got a...
Well, you could argue the gold parabolic rise is somewhat discounting that, right?
Absolutely.
You know?
Yeah.
Yeah, and like my view is that like all of these fiat debt-driven economies are unsustainable like over long term. But the answer will ultimately be more liquidity. Like if the treasury market came under severe pressure, like the Fed will do yield curve control, right? Like zero doubt. They have no choice but to do that, right?
Yeah, but that'll make gold go to 8,000.
Yeah. And Bitcoin will
Bitcoin
then
will
react.
get to 90,000 as well.
90.
like there's a game. It's almost like a game of whack-a-mole, right? It's like it's they just keep putting out the fires enough. And I think what's changed, and maybe this is what's feeding the goal as well, like some of that veil of stability is starting to slip. Because as well, we tend to look at FX with dollar versus euro versus sterling versus yen, but and everything's quite stable because everyone's playing the same game, right? Everyone's in the same bad situation.
Yeah.
I have to remind people when they're talking about...
You have to look at gold because that tells you how stable FX is.
Like the US... I think the Fed owns something like just under 20% of their domestic bond market, right? And people want to worry about the US is fucked. It's like well the ECB owned something like 25 to 30% of their domestic bond market. Same ditto for Bank of England. Japan, it's like 40%, right? It's like the 40 to 50%, right?
Yeah.
So the Fed could buy 20% of their own bond market and basically be back where the ECB stroke Japan are and be like, well, why are we any worse than you? But I think to your point, it all leads to liquidity. I think it's not going to be a straight line, and you get their balancing act is to try and maintain a sense of credibility that this is sustainable. And like with inflation, it's like the game is, we need to keep inflation at a level that we're debasing your currency, but in a way that you don't panic out of it. Not like we don't want to lose control like you see emerging market currencies do. So if we can just on the level keep it and basically make the Bitcoin hodlers who think like the basement trade and the fiat system's going to implode, if we can just make them seem like really extreme and this is silly, like, you know, don't question why you can't afford a house. That's just unfortunate, and that's because of immigration or all these other things that have nothing to do with it. Like it's like we can maintain this veil of credibility so that things don't get out of hand. The for me, like I always say, the big core option that Bitcoin is like one day it does. Everyone's like, shit, like you're literally you're battling this inflation and you're going to be printing money and
but I think that's what you're describing there is like an emotional impulse to like get me the fuck out of fiat, basically, right?
Yeah.
And that emotional impulse, when you have that's a fear-driven reaction, right? When you have a fear-driven reaction, you're not going to suddenly then pile into something you don't really understand, like Bitcoin, that hasn't been around for 5,000 years, right? Yeah. Whereas you're just going to buy some fucking gold or silver because you know what that is, right? That's not foreign to you, right? So it does kind of make sense. Like what we're starting to see in precious metals is the start of everything you're describing, and it is being driven by a fear from like Chinese and Asian investors who are holding fiat and seeing this is a shit show, and get me into something that makes me feel better, basically, right? That's
but all of these things like are playing out as we've discussed over the last couple of years. Like RRP goes to zero, they're going to have to restart QE, or they've kind of done that. All right, we're debating whether it's QE, but what they call it, RMP, Reserve Management Purchases, whatever. All right, so that's the new acronym for that, right? But we all kind of know what it is. Japan, one of the big Japanese banks came out the other week and said we're going to start buying more JGBs because of like the more attractive yields, which is really the government probably saying, right, we need banks to start buying more. In the US, they've now obviously tweaking the SLR so that banks are incentivized to buy more treasuries. If things came really under pressure, again, they can just like regulate that. All right, banks or pension funds or whatever have to hold more treasuries. So they'll make those institutions hold it, which again is why then you start going, all right, well, we start diversifying away from that into gold and Bitcoin.
But I think we're all agreed, right, that there's only one direction this stuff's going in. It's more currency debasement.
Yeah.
The issue is for crypto people, when the fuck does Bitcoin wake up?
Yeah.
Right? Because it was supposed to be a classic debasement trade.
Yeah.
Right? But there's some other force that is making that not apparent, right? Like we're seeing parabolic moves in the old school debasement trades. So could I say, is it this quantum risk that people are talking about? Is that a real risk that's being discounted into the crypto market that we should be concerned about? Because outside of that, I don't really get why we're decoupling so much, you know?
Yeah.
Have you got a thought on that?
Yeah, on the quantum side, it's probably a 5-10 year away problem, probably a minimum, probably a long stretch away. I think Ray Dalio talks a lot about short and long-term debt cycles, right? And he talks about how these are all converging at one moment. And obviously we're seeing that now with debasement of currency. And then you look at maybe like from this, like I said earlier, the sociological perspective of, like you said earlier, people don't want change when everything's going well. Again, you get the sort of those political differences are pulled to the absolute extreme. And you almost have this vicious circle of all these narratives. It's a tough one to sort of nail on about what my opinion is on it. If I'm really sorry, it's a boring answer, right? But again, it's fundamentally, I think that Bitcoin is struggling to find its narrative to, as I said earlier, like if you look at the average gold buyer, whether geography or you look at demographic or you look at whatever, okay, the average physical gold buyer is traditionally not that interested in Bitcoin, right? So I think for me, when you add all these together, it's more going to have to find its way as a pure diversification option, rather than being it's now gold or it's now a fry away from currency. It's purely like you would hold anything else in your portfolio. I know we, again, mentioned Dalio twice in a row, but again, you're looking for between 15 and 20 different holdings, which all play off against each other, whether it's stocks, bonds, crypto, Bitcoin, or whatever.
But the diversification angle, to some extent, also relies on it performing, over time as a net beneficiary in a portfolio, right? So when it was doing really well and it was decorrelated from other assets, it's like, this is the best thing ever.
Yeah.
Gives us positive return and it gives us diversification, right?
Yeah.
But as it's going through a period of underperformance and it's still not correlated, right? Particularly,
No.
but it's the underperformance going to mean that it's less desirable to put in a portfolio. But back to the quantum question, like you run risk in crypto, right? Are there serious conversations being had by people who run money in crypto about quantum, and how are they approaching the idea that this could derail the whole story, basically?
Yeah, there are very serious conversations about that, and that doesn't just span through Bitcoin. Obviously, like ETH Foundation or the Ethernet has been very open about being 100 years ahead of the curve, for example, and that's making a lot of noise rather than actually maybe implementing a technological update and things like that. It's again, it fits into that sort of qualitative mindset of the bigger picture and how quantum will impact Bitcoin specifically. We'll use for this example. Again, as far as if you look at how it's all coded together, for example, I think that it needs to be something which you have to be ultra aware of and understand what it would do to. Because again, if it was Bitcoin, which suffered some form of quantum risk or quantum attack, or the crypto markets can basically just goodbye. Like there's because Bitcoin is the leader, Bitcoin is the one. Arguably as well, there's the flip side of that to say, well, if that does happen, maybe Bitcoin led the way, but it opened the door for blockchain technology rather than Bitcoin itself, so would it be replaced? I mean, I speak a lot with people that work, not just obviously at Hivemind, but again, people just outside, which I've known for a number of years. And, you could get into the real nitty gritty about forking and, sort of how it gets, gets through that. But again, the key thing, again, it comes down to hash rate, right? And it comes down to like the security of the network. And with this drop off in price and all the things going on geopolitically and however you see or where the concentration of miners are or for whatever political reason they aren't, that's the one thing I think at the moment I'm more focused on keeping an eye on at the moment.
Yeah.
Because again, I think quantum does pose a risk. I don't think it's driving current price
underperformance,
action.
right?
No. But again, I think that
it feels a little bit narrative fitting, right, to the price action, doesn't it? Like,
it does, yeah. Look, I mean, anybody in, I think the hedge fund game, it doesn't take it seriously.
I think as well, before I came into the
shooting
studio,
themselves in the foot,
Yeah, before I came into the studio, I didn't have time to read it, but Brian Armstrong announcing that Coinbase are setting up some sort of research into the quantum threat.
Okay.
And there's been actually this week there's been a couple of others just kind of touching on that we're starting to look into that. And I almost feel like from the Bitcoin community, it's like, look guys, this is a threat. 10 years or not, could be sooner.
Yeah.
We need to
it's shaking confidence in the market.
It might be that again starts to be like all right, we it's being looked at. We're looking into, and again, like for me it's like if it's a threat to Bitcoin, it's a threat to everything.
Do you feel like it's almost like 2021's energy thing, right? Where obviously strategy and the boys, as they were, sort of went through, and obviously that was a big thing about the amount of energy it takes to mine Bitcoin, for example. And there were some insane valuations about people saying, it uses more than this major country and just to do this, that, and the other. It feels very like that. A little bit more serious because again, that's obviously the energy thing got debunked pretty quickly, and it was obviously quite verifiable. But yeah, the quantum thing's a little bit more serious. But again, it's also, I think it's good to talk about it as well, because I think, well, just from my experiences in crypto, not a lot of people, but people like to sort of bury the head in the sand a little bit and just say, well, if I hold it long enough, it will just go up. A little bit like they potentially people look gold, for example. But it's good that people have open discussions about quantum and its potential impacts and risks, because as I said a moment ago, anyone running money in whatever level, again, if they're just burying their head and saying, it's nothing to do with me, it's not my area of expertise, it's not my area of expertise. Again, I very much sit on the liquid token, I front face the market. I look at the market and I think at the moment crypto, as we've alluded to quite regularly, it's pure liquidity play. Trading ranges or trading levels, it's stop loss hunting, whatever. It's just, can you get your book up against the market this week? It's great for traders, right? This current period. But yeah, look, it's if I think as well. I mean, I think I won't name because I'm not sure exactly the source, but again, it's been a big thing at Davos as well with regards to AGI, quantum. Again, how do we control the controllables to a certain degree? And I think that having open discussions within crypto, whether it be on podcasts or it be at Davos or however, is the only way really to meet these problems front on. Otherwise, again, if we if we just bury heads like we did in 2016, 17, 18, you're going to get depressed, like winter of crypto, right? Like back in the day. But again, I think, I don't know whether you guys have a view on quantum or what the potential risks
I mean,
are.
I wouldn't say I by no means got a deep enough understanding to know, like, to discount the risk. Like, is it 5%? Is it 20% over what time horizon? But I think, the way I've always approached crypto is, I've always seen crypto as a bit of a call option, right?
Yeah.
I've always thought it's got a lot of asymmetric upside, and and if I put a amount of money that I can afford to say goodbye to, there's a lot of upside here, right? Now, once you did that 5-10 years, if you did that 5 years ago, 10 years ago, you did pretty well, right? But now you're at this point where you've got some sort of pot that you kind of don't want to go to zero, right? But you also realize this pot could still 10x in 10, 20 years, right? So it's like, I'm pragmatic about it, and I'm like, I will use options to make sure my real tail is protected, right? So yes, am I willing to take a 30% drawdown on my assets in crypto? Sure. Am I willing to take a 90% drawdown? No, thank you. So the way I can do that is by owning some downside, right? And knowing that that's probably money that I'm going to tear up, but that allows me to sleep easier.
Sure.
And that allows me to still maintain the upside asymmetry if this thing continues to go like I think it probably should. But at least some of those gains that have been made will be preserved, right? And that's basically how I approach it.
It's interesting you mentioned that, and I think that comes down to the whole psychology of the current market as well, where everyone's was, again, circa October, pre-1010, Bitcoin at 125 and ETH heading back towards 5K and things like that. Alt season what people expected to be alt season is just not there. And I think it more feeds into that. Like I said, I mean, if you've been in it 5-10 years, you've done extraordinarily well. As long as you had the conviction to hold it that long, you've done extremely well. But again, I think the thing that has traditionally drived alt seasons is, again, that retail participants in the space. And I think if you really just strip it all back, why do retail investors get involved in crypto or in altcoins specifically? Because they think, I could plant $5,000 on this coin,
outsized returns,
and it's going to do 10x, right? And that's now disappearing out of the market, which again, I think
that faith is disappearing,
right? And that's why meme coins had such a craze at the start of 24, I think it was, and there was like
finished Trump just before Trump launched his coin.
Yeah, thanks. Yeah, cheers, Tom. And I think that what I saw anyway at the moment is a bit more of a pickup in the meme market with regards to volume, and obviously Solana has posted insane amounts of revenue at the start of the year already. But that's also then, if you look at the NFT market and see the uptick in the NFT market and how that's now coming back around in some form of cycle as well. So it does, for me, feel like there is some form of interest still in there.
That's green shoots, right? For a potential alt cycle.
Yeah. And look, I mean, the institutional side of crypto is with spot ETS and whatever, and regulatory clarities and all that, and frameworks, and brilliant, fantastic. And it solidifies it as an asset class for good, in my opinion. But the fringe alpha, as it was called, right, where your friend makes 40-50 grand on an altcoin, that potentially still within the space of the market. Obviously not going to name any altcoins specifically, but that's what I'm seeing, maybe in a pickup on the NFT market, and really how I'm sort of reading it at the same time, where NFTs, let's be honest, after 2021 took a serious dive,
massively.
And I think that the pickup in them now is testament to there is still appetite out there, and it is green shoots. And if we do see a recovery in prices, and we do see majors move a little bit more constructively, probably to the upside, that opens up that world completely, because it's not like it's 2022 now, and it's not like there is zero bid on anything. Like, there are still people floating about the space with what you'd class as retail money. Obviously, retail's changed a lot in the last 5 years in crypto. People, once it was $5,000, now it's like people were moving crazy with a couple $100,000 in retail. It's insane. But I think that's more of a catalyst as well, because if majors do get more constructive, and you do get an uptick in altcoins, and people start talking about it again, and you see maybe like sociological trends back online, that's what fuels what gives crypto its narrative and what gives crypto its name. Volatility is the name of the space, right? And without that bid on alts, which you'll only really see in retail, without that, you might as well just trade BTC and ETH. And like you said, like buy a holding of BTC and then just cover yourself to the downside, like you said you do. I think that is the most sensible play if you're looking at it from a medium to long term perspective. But that's not why people get in crypto normally. People normally are attracted to crypto.
I guess we probably just need the metals rally to calm a bit, and then some of this spec money that has probably entered that space can start to look at value in crypto again.
I hope so. Yeah. Because again, like I think the world is at a weird position, right, with the decoupling of crypto against pretty much every asset class in the world somehow. And again, I think you'd like to think that with any form of easing, QE, not QE, however it may be, but you look at any form of what should be a catalyst for crypto. If it finds any constructive strength above 94.5, and then finds almost, it could then maybe range between 94 and 107. That becomes the new bound, and then it just structurally gets more constructive from that point. That's going to flood a lot more appetite into lower caps, and that's when you get like a lot of excitement. But
that remains to be seen. But I don't disagree with you. That does remain to be seen. All right, cool. Adam, pleasure to have you on the show. Thanks for coming on, giving us your thoughts.
No problem. Thanks for having me.
And guys, remember, like and subscribe to the channel. See more content like this, and we will catch you back here next week.